Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Asian stocks we start today mostly rose on Monday after a rate cut in China fueled risk appetite. The People's Bank of China lowered its benchmark interest rate by 25 basis points, alongside a 0.5 percentage cut in the reserve requirement ratio to jumpstart the slowing economy. Friday's move, of course, marked the sixth time since November that the PBOC has cut interest rates, and of course the fourth across-the-board reduction for the amount of deposits banks are required to hold in reserve. The estimated cash released from these policy changes is about 600 to 700 billion yuan in liquidity. Considering the inflation, of course, and industrial production data over the past quarter, this should be no surprise to traders and investors. In fact, the surprise is that it's taken so long for the PBOC to pull the trigger. Share markets in China ended mostly on a positive note, with the key Shanghai Composite Index closing just about 0.5%. Now, also tracking the Japan's 225 index performance, that it actually trimmed gains to finish modestly below the 19K mark, but still managed to close a 2-month high with 0.7% gain. Globally, the focus right now is on the central banks and monetary policy as a whole. Dollar-yen, for the example, was driven higher by general improvements in the risk appetite, not only on hopes of easing by the Bank of Japan alone. The greenback was down 0.2% at 121.16 yen after breaching a 2-month peak of 121.60 yen. In Europe, equities opened lower on Monday as, of course, investors treated cautiously after China's central bank made a surprise rate cut on Friday. The pan-European Stoxx 600 index was slightly lower, with all major indices in the red. Also tracking the euro, it closed up 0.2% to 1.1035 after falling to 1.0989, its lowest since August. Britain's economy is holding firm for now as domestic demand, wealth and global slowdown turns, keeping central banks around the world on alert. Forecasts that data next week will show expansion of 0.6% in the third quarter, close to the 0.7% price pace, of course, reached in the previous 3 months. The world also mark a 11th straight quarter of growth. Meanwhile, the pound holds above 1.53 versus the dollar to trade only 40 pips higher. Gold in the commodity sector steadied after a 3-day losing streak on Monday, but was hovering close to its lowest in near 2 weeks. That was because it was hurt by the strong dollar and fears that the Federal Reserve could still raise interest rates this year. A rally in global equities also kept buying interest subdued for the metal, which has been weighing down all year by uncertainty over timing of US rate hike. Gold was little changed at 1164.05 an ounce in late Asian trade. The metal had dropped to 1158.77 on Friday. That was its lowest since October 13. After, of course, early rising 1% in the session following China's move to cut interest rates for the 6th time in less than a year. Crude oil prices in the energy sector, they remained weak on Monday as a slowing demand outlook implied oversupply that it will remain in place for months to come, prompting speculators to cut their bets on rising prices. Front-month U.S. crude futures were trading at $45.65 per barrel during the Asian session. That was 5 cents above their latest close, but more than 12% lower than their October peak. That's all for today. Thank you very much for watching us. And of course, stay tuned for this week's events, a lot of important news. And of course, we will keep you up to date every day. That's all for today. Bye-bye.